Today we're going to talk about why some order blocks work and some mysteriously do not. But first we got to run that disclaimer. Although this video may show you hypothetical results that are profitable, it is also possible to lose money. There's no guarantee of success. In fact, most people who trade lose money. Collective 2 and/or trading in general are not right for everyone, so be careful to weigh the real risks before you decide on using a service like Collective 2. Use good judgment and never trade with money you can't afford to lose. So this is going to be true for virtually any kind of security, stocks, commodities, forex, you name it. But right here I have a 4-hour chart of the dollar-yen currency pair, and as you can see, the most recent order block was completely just annihilated. I'm gonna just draw a box around it. Price came to the order block and just sliced right through it, and today I'm going to explain exactly why that happened and why some order blocks work and some simply do not. And so here we have a couple of more that did not work. Sort of this one right here and another one right here, sort of related to the same move. You can see that the price just, in basically one candle, one 4-hour candle, it just sliced through all that. So now let's go ahead and in a different color, let's find some order blocks that did work, and we're going to try to spot what that difference ends up being. Alright, so the first thing I noticed is this one right here worked beautifully. Price came right off of it, and I'm just going to adjust that slightly to be a little bit more accurate. Price rebounded very nicely off of this one. We see one over here on the short side. We have this breakout level right here. Price reacted off of that and went lower, and we can even consider this one right here as having worked. As it would not have wicked us out, and price rebounded off of that quite nicely. There's another one right over here. Price reacted pretty nicely. You can't really see it on the 4-hour chart, but there's a nice order block in here, and price reacted and tested that high. So before I sort of give you my explanation as to why some of these work and some do not, I'd actually like you to pause the video and see if you can spot the difference between the order blocks that worked and the ones that did not. Ready? Alright, so in the case of the order blocks that worked, each and every single time price went almost to the order block, did not quite reach the order block, came up a bit, and then it broke that level that was created that was just shy of reaching the order block, and then it swept into the order block and rebounded. So we can see that happened right here. Price did not quite reach the order block, went up a little bit, came back down, and then reacted off of the order block. Okay. Same thing happened right over here for the bearish order block on the left side here. Price did not quite reach the order block, came down a bit, and then swept into the order block before reacting sharply to the downside as expected. We see that happening right here. Price did not quite reach the exact order block level, whichever one we can't see or aren't seeing on the 4-hour chart. Went back down a little bit, then came back up, swept that level, went into the order block, came back down. So now let's take another look at what happened in the cases when the order blocks did not work. As price approached the order block, at no point did it pull back and create the illusion that price was ready to reverse. That's the case here on the far right, and that's also the case with the one candle move that took out both of these order blocks. So if I'm looking to trade an order block, I need to see it come close to reaching it, start to reverse the other way, and then break that level that was created with the start of an up move. So now let's talk about why we need this little fake out move before price reaches an order block in order for the order block to work. The reason is because institutional investors need to engineer liquidity, let's say in this case right here, in order to facilitate their long positions, they need to engineer selling volume in order to accumulate their buy positions. And the way they do that is they will start buying just before an order block. So just before this order block, they will start buying. And what do retail traders think? Oh, that's close enough. It's close enough to the order block. They see price starting to move up. They get into FOMO mode and they start buying. When those traders start buying, where do they place their stop loss orders? They place it right below that level. So what happens to those stop loss orders when the price comes back down to the order block? Those stop loss orders are sell orders. So when price knocks them out, they're flooding the market with some sell orders. And those sell orders facilitate the institutional traders buying at the order block. So let's take another quick look at the price action to the right over here. So with this move being this dramatic, you have to ask the question, if the institutional investors want to take the price up after this move, where is the selling volume going to come from? The selling volume is going to come from the stop loss orders or the liquidity right under that level. And that's what they went for. And they took out that liquidity. Why? Because there was no liquidity generated part of the way through that move. So there are no selling orders until we reach all the way at the bottom of this range. Alright, so that's going to wrap it up for this video. If you found this content informative, I would ask that you drop us a like. It would help us out a lot. And stay tuned for more content.